everyone, this is Asavri here. I welcome you all to this webinar presented by investmentguruindia.com. Today I am in conversation with Mr. Mohit Gang. He is CEO and co-founder of Moneyfront. So welcome Mohit. Welcome to
Hey,
our show. It is such a
thank you so
pleasure to
much.
have you back on our channel.
Absolutely, it's all my pleasure. Thank you very much, Asavri, for having me out here. And as I keep telling, I'm a big fan of investmentguruindia.com. You guys do great work, and I'm happy to be here.
That is such a sweetness of you. So sir, last time we had a chat, we had a great session where you helped us understand the importance of investment and options of for investment for the beginners. Today we are moving a step forward, and we requested you to share three mutual fund schemes and portfolios that you think every equity holder must have in their portfolios. So the idea behind this is, in this ongoing chaos of pandemic, this current situation and post pandemic situation, there must be few mutual fund schemes that have poised in such a better way that they could extract more advantage out of the situation. So over to you, sir.
Thank you very much. So what I will do, and I'll just, for the sake of clarity, I'll just put the perspective first. I will try and present three funds, but it's my obligation and my duty to tell all your viewers and you that there are no right and wrong choices in mutual funds, right? If you stick by a particular allocation, if you've gone through a financial planner or an advisor, he's given you a particular allocation with particular goals in mind, then perhaps it is possible that these might not be the right fit for you. What we are trying and presenting here is three good ideas, three good schemes, which are fairly good for a long-term investor. And perhaps post the COVID scenario, which is after this pandemic is over or while we are going through this phase, this can be a good allocation given the way the portfolios are positioned currently and the way the fund manager has structured the entire scheme. So we particularly like these three ideas, but again, these are not the only ideas. There are like over 5,000 schemes in mutual funds, and each scheme merits a place in a certain portfolio, which has to be checked person to person and customized specifically to each one's own requirement, right? So these are more generic ideas, but yes, we have taken due care and diligence in kind of getting it out here. Post the three ideas, I'll also share one or two more thematic choices which can be good under the given circumstances and scenarios, which I guess is the idea for the day. And then yeah, I think that should be good enough. Yeah.
Okay, sir. Absolutely. So it would be very helpful if you could share screen and help us understand it in more detail.
I will do that. So I'll share my screen and I'll go through the ideas. Thank you. So I hope the screen is visible.
Yes, sir.
Yeah. Okay.
Yeah.
All right. So I'll quickly launch into the three ideas, basically. And I keep saying in all my forums, in all my sessions, webinars, wherever I meet my clients, my favorite all-season pick, if you want to invest for generations, if you want to invest for decades, basically, is an index fund. Look, you can't go wrong in an index, right? And I will come to the specifics of why a particular index fund, but you can't go wrong in an index. Index is the barometer of a country's progress. Index is the first indicator of country's equity market, right? So that index reflects a country's well-being, basically, right? So, and the good part about an index is it is dynamically managed, right? So a nifty index is a value weighted index. Depending on the value of the companies and few other parameters, the companies come in and go out, right? So it's not a static index of 50 companies ki agar 98 में शुरू हुआ तो 50 कंपनियां वही है आज तक, ऐसा नहीं है, right? Those companies have been changing, ins and outs have been happening every time, every year. They review, they rebalance, and they get in the best companies in the country in the index to represent what the index should look like, right? So that is why I like an index fund. Now, index fund is a passive way of investing. There's no active management per se. You don't have to have a genuinely high knowledgeable and capable fund manager. It's more a way of just tracking and copying the index as it is, the weights which an index has of particular sectors and particular companies. आपको उनको कॉपी करके बस एज इट इज लगाना होता है, एज इट इज इन्वेस्टर्स को देना होता है. In the famous philosophy of Jack Bogle, and I really loved his work. He was the biggest fund manager at Vanguard. He was the biggest proponent of low cost investing and index investing globally. So he used to say that by far, if you really want to make money in the long term, and long term means like 30-40 years, right, you have to buy an index and not anything else. So that's the whole philosophy. Look, इंडेक्स का सेक्टोरल और होल्डिंग्स को हम डिस्कस करने का ज्यादा वैल्यू नहीं होगा, बिकॉज जो निफ्टी की होल्डिंग्स है, जो निफ्टी का सेक्टोरल कंपोजिशन है, एग्जैक्टली वो इस फंड का कंपोजिशन होगा. सो यू कैन सी रिलायंस इज द टॉप weighted company in the index, and you've seen Reliance's performance, right? So when you buy the index, you're buying almost 12% of Reliance out there, right? Which is the highest stock in your portfolio. If you go back and compare कि कितने large cap funds में Reliance was the top holding and over 12%, those are the only few funds which would have really beaten index hands down, because Reliance has been a top performer in the index for last 6 months, if you see. Right, so that's how it's very difficult to beat index when it comes to quarter on quarter kind of cycles, right? You see HDFC Bank, again a great performer for years and decades put together, 10% value. HDFC Limited, 7% value. Then you have Infosys, ICICI, TCS, ITC. These are all great names, marquee names. So obviously when you buy an index, you buy the best names, you buy the best quality, you're assured of it, you can't go wrong in it, right? Your sectoral composition is fantastic. नाउ द क्रिटिकल क्वेश्चन कि मैंने टाटा निफ्टी इंडेक्स फंड ही क्यों सेलेक्ट किया? सारे फंड हाउस का एक इंडेक्स फंड होता है, राइट? सो यू गो टू एचडीएफसी, यू गो टू आईसीआईसीआई, यू गो टू एसबीआई, यू गो टू यूटीआई, आईडीएफसी, एनीवेयर यू विल फाइंड अ निफ्टी इंडेक्स फंड, यू विल फाइंड अ सेंसेक्स इंडेक्स फंड, एंड सबका अपना अपना एक स्कीम होगा. Why Nifty? I like Nifty because obviously Nifty is a better representation. Higher volumes in the country happen on Nifty. Futures and derivatives market is more evolved on Nifty. Nifty is a portfolio of 50 companies. I would rather go with a portfolio of 50 companies than restrict myself to 30 companies. But there's no hard and fast rule. If someone wants Sensex, he can go for a Sensex index also. I personally like Nifty as a better barometer of countries' progress, right? So it's completely allocated. They hold very little or marginal cash just to take care of liquidity positions, which means your entire 100 rupee or 99 rupees is completely invested. It's a pure play large cap blue chip portfolio. So anyone wanting a large cap allocation, this has to be the first fund in the portfolio. Now, why do we go for Tata Nifty Index Fund, right? Why Tata? देखिए, जब मैंने आप बोला कि इसमें फंड मैनेजर का इतना ability काम नहीं करता, because these are more passive strategies, these are not active strategies where you require high level of expertise or high level of chop and churn and active management by a fund manager. तो वहां पर one key factor which plays a major role is the expense ratio of the fund. जिस फंड का, जिस स्कीम का एक्सपेंस रेशियो सबसे कम होगा, that scheme in the long run will deliver you the best amount of return. आप यहाँ पर, if you see the expense ratio of the scheme in the screen, and I'm trying and hovering my mouse around and circling it, it's 0.05%, 5 पैसा. It's the lowest expense index fund, नहीं, lowest expense equity fund you will find across the segment. Liquid fund का भी expense इससे ज्यादा होता है. वो 5 पैसे के एक्सपेंस पे आपको इंडेक्स खरीद के दे रहा है. बेसिकली आप एक लार्ज कैप फंड लोगे, एंड माइंड यू व्यूअर्स के लिए आई विल जस्ट रिपीट, ऑन आवर प्लेटफॉर्म वी एडवोकेट ओनली डायरेक्ट प्लान्स, और मैंने जितने भी एक्सपेंस रेशियोज दिखा रखे हैं वो सिर्फ डायरेक्ट प्लान्स के दिखा रखे हैं, रेगुलर के नहीं दिखाए हैं. अगर आप रेगुलर का एक्सपेंस रेशियो देखोगे तो हो सकता है इसी स्कीम का एक्सपेंस रेशियो 20-25 पैसा हो शायद, बट मैंने डायरेक्ट के एक्सपेंस रेशियो दिखा रखे हैं, डायरेक्ट प्लान के, which are readily available now. Anyone can go and buy direct plans, and that is where people should move to. They should start buying direct plans. That's where they will save a lot of cost and enhance their returns. राइट, तो 5 पैसे का एक्सपेंस रेशियो है स्कीम का. आप किसी भी दूसरे इंडेक्स फंड को ले लीजिए, उनका एक्सपेंस रेशियो बहुत ज्यादा होता है. आप कोई एक्टिव लार्ज कैप फंड लीजिए, and I'll just give a comparison out here. Let's say you take any large cap blue chip fund. उसका डायरेक्ट प्लान में एक्सपेंस रेशियो कम से कम 1.25% होगा, 1.25 to 1.5%, एंड रेगुलर प्लान में एक्सपेंस 2% के आसपास का होगा. When you save almost 1.2% on expense ratio every year basically, और आप लार्ज कैप का हिस्ट्री देखें लास्ट 10 साल का, तो annualized return CAGR for the entire category has been 10% roughly. 10% में आप 1% का एक्सपेंस रेशियो ही बचा रहे हो हर साल, which is 10% of your returns are coming just by virtue of reducing the expense ratio. It is very difficult for a normal large cap fund to cover this kind of return differential every year. Basically, I'm not sure how clear I have made the point, but मैं ये बोलना चाह रहा हूँ कि जहां पर एक लार्ज कैप फंड को 11% रिटर्न देना पड़ेगा, वहीं इंडेक्स 10% रिटर्न देके भी उसके बराबर का रिटर्न प्रोजेक्ट करेगा, बिकॉज दोनों के एक्सपेंस रेशियो में फर्क है. लार्ज कैप फंड जब 11% रिटर्न देगा तो कस्टमर के हाथ में, क्लाइंट के हाथ में, इन्वेस्टर के हाथ में 9.75 ही आएगा, and that will be the published rate also. But when he invests in an index fund, वो अगर 11% रिटर्न देगा तो इन्वेस्टर को 11% ही मिलेगा, 5 पैसा रिड्यूस कर दीजिए, 10.95 मिलेगा, राइट? सो दैट डिफरेंशियल इज फेयरली हाई. When it compounds year on year, it matters a lot. It is a huge differential. So that's why you have to always pay cognizance कि आपका expense ratio कितना है एक स्कीम का. Return in the large cap segments are more or less will hover in the same direction, right? And SEBI ने definitions बहुत tight कर दी हैं. After the fund categorization and reclassification, a large cap fund can only invest in top 100 stocks of the index. वो उसके beyond invest नहीं कर सकता. तो किसी भी large cap fund को mandatorily 80% तो top 100 में से ही लेना है. So उनके पोर्टफोलियो में वैसे भी 70-80 स्कीम्स होते हैं. पोर्टफोलियो का साइज कुछ 15,000 करोड़ 20,000 करोड़ का होता है. सो दे आर वर्चुअली बाइंग एवरी स्टॉक in that top 100 segment. So it's very difficult for them to create differentiation vis-a-vis the index, right? Only differentiation which comes is holding सबके same होते हैं कि किसने कितना weightage दे रखा है एक particular script को. That is what creates differential in returns. So it can't create a huge differential in the return, right? So that is why I like an index fund. Any first time investor, any long term investor, the first thing in the portfolio one should always have is an index fund. उसके अंदर में सिलेक्शन का सबसे सिंपल क्राइटेरिया है, आप लोवेस्ट एक्सपेंस रेशियो लीजिए जो मार्केट में चल रहा है और उसको जाकर ले लीजिए basically. So that's where the index fund scores high. So that was my first pick.
Sir,
Yeah.
if I may interrupt, यहाँ पे exit load के बारे में आप कुछ बताना चाहोगे? Like index fund में exit load लगता है हमें?
That's also a very good question which you ask. Index fund में exit load इधर नहीं होगा या फिर सिर्फ 30 डेज के लिए होता है, किसी में 7 दिन का होता है, उससे ज्यादा का एग्जिट लोड भी नहीं होता है. Other than that, a normal equity fund will have an exit load of at least 1% for 1 year. Most of them have it. But in an index fund, the exit load will only be for 7 days, 10 days, or at best 30 days, and that 2.25%. So even that criteria is a fairly relaxed criteria in an index fund.
Okay, sir.
Right. So that's the typical return of an index fund. It is what the Nifty returns are. So you can see there is very marginal tracking error, but otherwise it will exactly mirror the Nifty returns. Okay, here we come to our next choice. Once you're done with your large cap allocation in your portfolio, कि मैंने अपना large cap allocation पूरा कर दिया. In any good portfolio, large cap should be at least 50%. उसके बाद depending on your risk appetite, it can be more or less, but 50% तो होना ही चाहिए large cap किसी भी portfolio में as a thumb rule. The second allocation which should always come in a portfolio is a multi-cap allocation. Now, India में the definition created by SEBI under reclassification and categorization is categorizes थोड़ा minutely. तो आपके पास 3 categories हो सकती हैं जिनको आप थोड़ा सा multi-cap types बोल सकते हैं. Large plus mid-cap category होती है, एक pure multi-cap category और एक focused category है. ये तीनों categories हैं जिनको आप ब्रॉडली कहें तो मल्टी कैप कैटेगरी में भी क्लासिफाई कर सकते हैं, राइट? सो आउट ऑफ दैट I personally like this theme of SBI, which is SBI focused equity fund. It's though classified as a focused equity fund, but it more works like a multi-cap a multi-cap theme basically, right? So sorry, वो हमारे पिक्चर्स कवर कर रहे थे इसको, इसलिए आई हैड टू toggle a bit. But the fund is a very interesting fund, and the thing which I like about this fund is, first of all, they have a mandate to invest in international equity also. They invest a very little portion though, and they have a very peculiar pick, but their picks have been very good, and that has worked fantastically well for this fund. It's a 5-star fund across time frames, done exceedingly well. um, they have always been very smartly and sharply managing the portfolios. If you see this third allocation out here, I personally love this allocation. It's Alphabet, which is the mother company of Google, where Sundar Pichai is the CEO now. You see the growth trajectory of that particular stock. It's been a one-way rocket up. It's like a hockey stick, the way the stock has been performing and way the company has been doing per se. So it's a fantastic allocation. You look at this portfolio, barring 2 or 3 names in the top 10, right? You love the companies which are there. Procter and Gamble, right? You'll find very little top 10 portfolios with a top 10 holding, which is PNG out there. Now, PNG is one of those classy FMCG names where the liquidity is very less in the market. These guys really hold a large chunk out there in the company. They are makers of the largest sanitary pad napkins in the country. They have some famous brands out there. And it's like a global company which those kind of businesses never die, honestly. I think it's a very high it's a very expensive stock though, but these are like fantastic stocks to hold in a platform. Bharti Airtel, the stock has done fantastically well this year, which is one of the leading reasons why this fund has done very well. They also have some pharma exposure, which comes through DV's lab. And they have TREPS, which means they're holding some cash position to play things also, which is more like holding money in treasury repos. So which is more like a cash play. The fund manager can deploy cash smartly whenever he wants. Adani stocks again have been jumping through the market, jumping through the roof. So the good allocations, very different top 10 allocations. I really like the portfolio construct in terms of top 10 sectors. They have a very high allocation out there to household and personal products, which is the consumption driven theme. And trust me, after the post-COVID scenario, and within the post-COVID scenario also, one theme which has not got impacted to a very large extent is the consumption theme. People have hoarded stocks. People are going out and buying more than what they were buying in terms of groceries and normal eatables and food, because you're staying at home every day. You just keep eating. So I keep drinking my tea every time, and it just keeps on going, right? So I'm just giving a normal example, but yeah, it's been a good pharmaceutical and drugs. Again, pharma stocks have been jumping, shooting through the roof. They have a very reasonable allocation out there. Chemicals doing very good. So I like the sectoral and the equity composition. I like the international equity part out there. I like the pick in the international equity part out there, which also gives them a flexibility and mandate to keep playing around with and keep changing and keep getting those best names globally in the portfolio, which will be a very good and a smart allocation for investors. If I go into the portfolio construct, it is a very good multi-cap construct. 50% of the portfolio coming through large caps, 15-16% in mid caps, and small caps 37%. The small and mid cap, they very smartly keep maneuvering and keep changing. कभी small को बढ़ा देते हैं, अभी बढ़ा दिया है, mid को कम कर देते हैं, large cap को consistently अच्छा रखते हैं, around 50% of the portfolio or more. So I like that play, the interplay out there, which is very good. R. Srinivasan, the fund manager, is a very respected gentleman, old hand, has been doing fantastic work. It's also a very old fund. It's not like कि fund अभी आया है और अभी से perform करना शुरू कर दिया है. Expense ratios are fairly reasonable under direct plan. Regular plan का expense ratio भी मैंने दिखाया है अपने screen पे. AUM is very apt for a multi-cap strategy, which is right 8,000 odd crores, not very large like a 20,000 odd crore scheme, not very small. They have enough and more money to deploy. So it's overall, if you see I like the overall mix and the feel of the fund. It's a growth style. It's a growth style investing with a large cap bias. So very good portfolio allocations, very good matrices. Returns has been phenomenal. they've done fantastically well on a 3-year 5-year scale. Obviously 1-year scale में आप कुछ भी देखेंगे अभी, and this is performance as of yesterday, as of 2 days back, sorry. So आप 1-year scale पे कुछ भी देखेंगे तो obviously everything has delivered some amount of negative return, but इनका negative भी इतना बड़ा नहीं है एक साल का, compared to the index which is down 11% in that same time frame, right? So they've done reasonably well. So that's my second pick in the multi-cap segment. I'll quickly jump on to the third one. I like this. I like the fund house. I like the people. I like the fund manager a lot in this one. Mr. Nilesh Surana. He's been doing fantastic work. Previously, it was Mr. Gopal Agarwal, who has now moved to DSP as a fund manager out there. He and Nilesh were managing this fund when it started, and they have built the scheme bottoms up. Bottoms up mean there were not many people who were willing to give Mirai a chance in the market when it was actually launched. I remember those days. I used to work with Citi, and we used to meet Mirai team, and the fund manager then was Gopal Agarwal, used to come do sessions, and obviously there wasn't very much interest because uh, koi to Korean fund house, people not relating to it, fund managers were unknown, and they struggle their way up. They have literally struggled their way up, and the AUM has come only because of the performance. Sometimes AUM comes because of your distribution might, sometimes AUM comes because of your contact, sometimes AUM comes because of the high payout ratios given to the distributors across the street, and there can be multiple reasons, but this is one fund which has been built bottoms up. When I say that, it has come only because of performance. So there is a huge pull factor in the market for this fund. It's a great fund. It is classified as a large plus mid cap category under the SEBI classification. पर से आप इसको मल्टी कैप बोल सकते हैं एक नॉर्मल अंडरस्टैंडिंग हिसाब से, बट लार्ज प्लस मिड कैप कैटेगरी इज द लोकेशन. Fairly clear crystal portfolio. So top holdings are all banks. They have reposed their faith in top 3 private sector banks in the company: HDFC, ICICI, Axis. Reliance obviously is a large pick out there. L&T and Max Financial Services is one very interesting pick which they have. TCS and Mindtree. So they are obviously bullish on IT, software services as a sector. Now that is something the world is going digital. The world is going completely digital. We are doing these sessions like this, and I'm not sure will we ever do a session sitting together, right? So that's now very clear. If this is going comfortably well, which it is, I think we'll continue doing this format basically. So world is going IT. So if you see their sectoral allocations is IT, refineries, which is Reliance, pharma, household and personal products. So you see the top एक banks private को हटा दीजिए जो कि रखना पड़ता है सारे schemes को, because they have to actually give some weightages to these banks because of their index holdings. Otherwise, they completely underown these sectors compared to the index, and that is actually not possible. It's a very high risk strategy which most of the fund managers don't play in the country. But other than that, if you see the next 4: IT, software, refineries, pharma and drugs, and household personal products, and power generation again, and chemicals also, if you go down, none of these will get impacted by COVID. In fact, they are all benefiting because of this entire scenario. These are all the sectors which will reap huge dividends out of this entire scenario. IT is getting a huge boost. Everyone is wanting to go digital. Digital spends will increase, and these big companies will find more and more worth in it. Refinery, obviously, Reliance rules the roost, so everyone knows what is happening out there. Reliance is in news virtually every week because of equity dilution. Pharmaceuticals and drugs, I need not say that. After a long break, pharma sector has started pulling up its weight. And household and personal products, as I always said, consumption. India is a consumption story. It's a demographic story, and that story will continue to last for eternity. You can't go wrong in that segment. More so now when we are sitting at home and consuming more and trying and holding more inventories of our food items and personal care items. Basically, power generation, obviously, घर में सारे rooms occupied होते हैं, net चल रहा है, connections चल रहे हैं, electricity चल रहा है, AC चल रहा है. I think those are all things which will go up basically. So good sectoral allocations. I like it in this scenario. The fund continues to do well. You see the allocations, very smart allocations, 60% in large cap, 30% in mid cap. That says the story, right? So they're very well positioned out there. Very small tactical allocation in small cap. They keep playing. That's more tactical in nature, as in when they find good opportunities out there. Nilesh Surana is the key fund manager, as I told, as I mentioned. Been big fan of him. AUM is just about right, 8,800 odd crores. Very good AUM. Expense ratios are neat under direct plan, 86 bips, which is very good. So overall, a good fund. Again, with lot of what do you say, uh, right matrices and right ratios. Return wise. Again, if you see the performance since inception is a good 20% odd CAGR fund since 2010, which is a 10-year track record of 20% CAGR is a fantastic track record. Last 3 months has been fabulous for the fund, all because the sector composition has come in right. It's a great all-time performer. So it's a no-brainer out there. So these are my 3 picks. My 3 in pecking order, which is an index fund, an SBI focused, which is a multi-cap kind of a focus theme, and emerging blue chip, which is a largest mid. I also have 2 tactical plays for people who want a high risk play, but getting into these is easy. Getting out of these might be difficult. You need to know the right, a little bit of timing play out here, but I'll just throw the names. I'll not spend much time on it. I like a pharma theme currently. We've been advising this to our clients since the start of this year. I think pharma deserves its stay in the sun now. It's been good 5-6 years that pharma as a sector has not done well. And when you talk of pharma, you have to talk of Nippon Pharma Fund. It's great allocations, done fantastically well. Good categorization market cap wise, and the fund has been in vogue since 2004. It's a 16-year track record. So it's a great fund actually. Shailesh Raj Bhan has been running this. He's a champion in this strategy. And off late, you see the returns will be astonished. Last 1 year, when index and everything has been showing negative, this one fund has done 38% return. In last 3 years has been 15% CAGR. So it's a fantastic story for last 1 year, 2 year. We believe it will last for some while longer, and it's a good play. One more play which I like is this great consumer fund. Again, as I keep telling, consumption is a theme, is my favorite theme. It's a favorite all-time theme for long-term investors, and in this current scenario and current play, consumption of all kinds will come out. Discretionary को शायद थोड़ा time लगेगा. Necessity consumption is happening at frantic pace. People have not stopped eating for a while. There've been no shortages of food supply. In fact, everyone's eating more, consuming more, and even the other kind of things. You've not stopped eating your Maggie, or you've not stopped having your Nescafe, right? So those stocks have been doing fantastically well. So it's a great portfolio. I'll just toggle my screen to give you a perspective of top 10 stock holdings. Good, beautiful brand names out there. Those companies you don't go wrong. You don't go wrong in a Livers, in a Marico, in a Britannia, in a Dabur. Those are like long-lasting names. Our generations will know about it basically, and they will eat the same kind of brands. So it's a good fund. I like it. Matrices has been great. Again, from Mirai stable, they manage it really well. And return wise also, last 3 months have been fantastic. Last 1 year has been at par with what other funds have been, and since inception has been 14% CAGR kind of a return. It's a good theme. I personally like it in the current context. So that's more from us basically. Yeah, and I think that's from my side.
Okay, so Mohit, I have few questions for you. Like, how does turnover ratio fund play a role while choosing mutual funds?
Okay, you want me to continue the screen share, or can I remove it?
Whatever you're comfortable with.
I'm fine, because I don't think so. We'll have to go back to the fund, or let me keep. Maybe you ask some questions on the ratios or something. Okay, so turnover ratio is particularly a matrix which kind of says कि fund का portfolio कितना churn होता है. So out of 100 stocks, if a fund is keeping in a portfolio, how many will they chop and churn through the course of the year? So when it says 0.6, which means 60 stocks will go through a change. Basically, whether full change or some ratio change is not indicated by this completely, but it means that 60% of the portfolio is getting moved in a year. So that's the turnover ratio. Look, very high turnover ratios can mean some amount of extra cost in the fund, and you have to be always very particular about the cost. Funds which have turnover ratios over 100%, which means that they are like completely changing their portfolio once in a year and like reshuffling, also shows lack of confidence and lack of in your own abilities and in your own stock picking, which means आप अपनी ही चीज जो आपने पिक की है उसमें एक साल से पहले गलती निकाल रहे हो, as in कि गलत ले लिया कुछ और ले लेता हूँ, and you're changing it completely, or you're changing the allocations big time and mixing it big time. That should not happen. It can only happen if there are a lot of fresh flows or a lot of redemptions. Those can be reasons for you to increase or decrease your turnovers, but very high turnover ratios over 100% is not a good indicator technically. So you should look that as a red line कि बहुत ज्यादा फंड मैनेजर अगर चॉप एंड चर्न कर रहा है पोर्टफोलियो में 100% से ज्यादा का टर्नओवर रेशियो, which means it's not a good sign for the overall portfolio. So yeah, that's what it is.
So what should be the ideal turnover ratio?
Anything below 100 is good. I would say this ratio is quite good. Around anything between 30 to 70 का band is very good. So that's fairly good. अगर 30 से कम है तो वो तो बहुत ही अच्छा है, which means fund manager is so confident of his holdings that he is staying put with almost 70% of his holdings across years, which is very good indicator. But कम मिलते हैं ऐसे fund.
Okay. So and what about the Sharpe ratio?
Okay, so look, if you go into technicality of it, basically it's a risk-adjusted return. कि कितना हो सकता है? Let me just give you an example of a better Sharpe ratio out here. This is an example. When you say the Sharpe ratio out here is 0.46, any Sharpe ratio number which is greater than 0.2, 0.3 is a very good indicator. The higher the Sharpe ratio, the better it is, which means risk adjusted return fund का अच्छा है, which means ये कम risk लेके ज्यादा return दे रहे हैं. तो Sharpe ratio जिसका जितना better होगा, जिसका 0.2 से ऊपर होगा, उसका मतलब ये ज्यादा return देने के लिए कम risk ले रहे हैं अपने fund में. Comparatively, so it's a good indicator. Halaki it's very difficult to get the exact ratios out always, but it's a fairly good indicator. Now this fund is 0.03 minus 0.03, which is almost like zero, which means jitna risk le rahe hain utna hi return de rahe hain. So they're taking commensurate risk and commensurate return. Again, same the story for jitna risk hai utna hi return hai. Similar kind of stories all across basically. Halaki for an index it is wrong to see any of these ratios. Index is more like jo index hai wo hai, you're buying the index. But otherwise, yeah, Sharpe ratio agar better hai kisi fund ka, that shows acumen of fund manager, that he's taking for per rupee incremental return per rupee, he's taking lesser risk.
Okay. So I guess that's all from my side. आपने इतने अच्छी तरह से explain किया that I don't have much questions to it. आपने बहुत ही simplify करके explain कर दिया actually why to buy these funds.
Thank you. Always my pleasure. If it helps your investors, anyone who believes in investing, who believes in long-term value of investing, I think that's great. My only philosophy has always been, I personally like this saying from Bible that one should invest not for his children, but for his children's children. And which goes to say that your portfolio should always be built with a very long-term perspective and a long-term mind frame. उसमें फिर कुछ गलत चला जाए तो obviously इसको change करिए, but buy something which you will be comfortable holding for eternity. So that's where I come from.
Okay, thank you so much, Mohit, for joining us here again. Even this session was also very, phenomenal, like previous one. लोगों को बहुत ही helpful होगा ये सारा information, and you explained with such an ease. Thank you so much for being here.
My pleasure, and thank you very much to investmentguruindia.com. And I keep saying, I'll again repeat, you guys do a fantastic work, and I'm a big fan of yours. So all the best, and thank you very much for having me out here. as a wrapping thought, please bear in mind, these are all subject to market risks, and no past performance is never an indicator of future returns. So please bear in mind that these are finally equity instruments. You are subject to market risk and volatility. So be in touch with your local advisors, distributors, आपके जो associates हैं, and take a calculated call depending on your own circumstances and situations. Ours is a more generic advice. Uh, that's from my side. Be careful and stay safe and invest safe.